You mentioned the importance of a title-specific E&O provider for people in this space. I wondered if you'd give me a little bit on why title-specific is critical.
It's nuanced and it's front end and back end. So you got the front end of no one's ever going to have a claim, right?
Yep.
And it's not me, it's other people.
Right.
But on the front side, you spend a lot of time on our professional services definition, which is broad enough and fluid enough to kind of move along with the exposures. But it names a lot of specific job functions within the title industry and associated abstractors, escrow, notaries. And it also references the part of Dodd-Frank that basically says, hey, here's the definition of professional services. So if that ever changes, then our policy flows right along with that. Then you got the back end. So that's claims. Somebody has a claim. You want someone who is dedicated in that space, right? All our guys do all day long, and all they have done for 40 years is title claims, right? Title associated claims.
Welcome back to Keys to Real Estate. I'm Mary Schuster, and today we're digging into a topic that most people in the title business know they need, but may not fully understand until something goes wrong. And that's E&O insurance. My guest today is Casey Withers, Senior Vice President at Amwins and Program Executive for TIAC, which is the Title Industry Assurance Company. Casey brings a great perspective to this conversation because his background spans underwriting, reinsurance, claims strategy, and program management for companies like TIAC. Now, TIAC has actually been serving the title industry for nearly 40 years, and what makes it particularly interesting is that it was created specifically for title professionals, with the support of Alta and industry leaders during a period when coverage options were drying up. Now, in this first part of our conversation, we're unpacking the fundamentals, what TIAC is, why it was formed, how a risk retention group works, what makes title-specific E&O coverage different, and some of the policy details agency owners may not realize they should be paying attention to. So if you've ever renewed your coverage by simply checking the premium and signing the paperwork, this conversation is going to give you a few things to think about. So here's my conversation with Casey Withers. Let's go. The presenting sponsor for this season of Keys to Real Estate is First American Trust. First American Trust redefines banking for title and escrow companies. They offer innovative solutions that integrate banking functions directly into title and escrow software systems, enhancing operational efficiency and safeguarding financial transactions. At First American Trust, you have direct access to a personal relationship manager who delivers answers in real time. First American Trust is also recognized as an elite provider for the American Land Title Association. As a wholly owned subsidiary of First American Financial Corporation, they have roots in real estate tracing back over 135 years and is the only bank owned by a title company. With deep roots, advanced solutions, and a commitment to real relationships, they are setting a new standard for the industry. The future of banking for title and escrow starts with First American Trust. Visit firstamtrust.com to learn more. Casey, welcome to Keys to Real Estate. We're so excited to have you here.
Thank you very much. Great to be here.
Well, we have so many questions. I want to start today for someone who has heard the name TIAC, or excuse me, the initials TIAC, but isn't quite sure what it is. How would you explain it to them?
Yes. TIAC, if everyone was wondering what it stood for, is Title Industry Assurance Company. So that's kind of long and drawn out, so we call it TIAC. TIAC has actually been around for almost 40 years, if you can believe it, and it specifically was designed to provide errors and omissions insurance coverage in the title industry space. I think it was formed in 1988, and it's all we've ever done is focused on the title industry space. We don't go into other classes of business or anything like that, and we live that day in, day out, and have so for the last 40 years. We've tried to provide a kind of a consistent solution for our friends in the space when it comes to their E&O coverage and a personal solution as well.
Well, that's fascinating because title insurance and real estate sector in general is getting a lot more attention than it used to, and especially title used to be a little overlooked corner of the real estate transaction. And one of the things that I think is really interesting is TIAC says it was created by title agents for title agents. And as more new players sort of come into this space, I wonder, what does TIAC being created by title agents for title agents mean in sort of real practical terms?
Yeah, and it has the added value of being the the truth, right? We were created back in the 80s. There was a crisis. We may get into a little bit more later on in the space. Coverage was drying up, not only for title agents, but across other classes of business as well. So some of the leaders in the space got together, some of the larger title underwriting companies, some of the larger title agents, Alta, which is the American Land Title Association, all kind of collaborated to figure out how are we going to address this and how are we going to keep our title agents business running, right? Which is, everyone loves insurance, right? But it is critical to have your insurance in place, and without it, it would have been a hard time to keep the industry going. I was not around for that, if you can believe it, but I have heard about it, and a lot of those folks who were there in 1988 making sure that we launched the company are still part of the business to some extent.
Well, I will want to dive down in that a little deeper then too. But and most of our people in our audience know the difference between E&O and general professional liability stuff, but there are a few who won't. So can we just do a real quick primer on that?
Sure. So the difference between more of a generalist and a more of a specific carrier for a specific type of E&O, and I think that's where a lot of the rubber meets the road, really. There's a lot of professional services out there, a lot of professional liability. There's a million different classes. A lot of them are covered by what's called a miscellaneous professional policy, which is which covers everything essentially that's probably not a lawyer or a doctor or a real estate agent or something that essentially you have to be licensed for, all gets bucketed into what's called MPL or miscellaneous professional. And so a lot of folks can get a policy, but it wasn't designed specifically for what they're doing. It was sort of a one size fits all. It has a definition of professional services that may or may not be applicable, and they're getting something that may not actually cover them when there's a claim. TIAC or any other specific insurance company writing for a specific class of business has worked hard to develop a product and a policy and a claims resolution that are all designed for a specific class of business, which is pretty important.
I would think so. All right. I want to go back to that origin story a little bit. You mentioned that there were some oddities going on in the marketplace back then, and that Alta said, okay, we need to come in and solve some of these problems. What was going on? What was missing in the industry, or what was it going through?
Yeah, it was interesting. When I was looking back again, I wasn't quite working just yet, but so I had to look back at a little bit and refresh myself. But there were some industry-specific, class-specific things going on, but there was also sort of the broader marketplace. The broader insurance marketplace was having some trouble. There was some shifting in the court system in terms of how they were treating liability, in terms of strict negligence and strict liability. Those changed a little bit. As a result, guess what? A lot of claims came out of that. There was a different definition of duty of care. On the same side, all of this tied to that, there was a constricting of coverage, right? So insurers, when all this stuff starts going on, they start to constrict coverage. Their friends who back them on the backside called reinsurers, those exist. They insure insurance companies. When those guys tighten up, then the insurance companies have to tighten up. So it's all this knock-on effect, right? You got interest rates in the 80s doing what they were doing. They were really, really high towards the early 80s, then started coming down again at levels that would probably shock all of us today as being lower. And all these things were contributing to a real estate crisis, and so it was just a bad environment. So while there was things impacting the title industry specifically, it was really a broader problem. So each of these little specific niche classes of business had to figure out how they were going to survive in this. So that's what ultimately led to the formation of TIAC, along with a bunch of other sort of risk retention groups or other vehicles to house industry-specific exposures.
Okay, well, that makes complete sense. And so that volatility was going on. Alta helped shore up our industry to make sure we continue to have a lane there. Are we still seeing some echoes or some outflow of that today, other than TIAC still in existence? Are there other things that we're seeing, or did we kind of get over that hump and here we are?
Well, yeah, I was thinking about that. As a general statement, the professional liability world, if we zoom out from title agency into broader, is fairly competitive. In the insurance world, we call that a soft marketplace. So it's a softening or soft marketplace, meaning there's a lot of insurance companies providing capacity. And as you zoom into certain classes or segments of business like title agents, those can act a little differently than the broader space. So whereas I was speaking previously, the whole liability world was a disaster in the 1980s. It's a little different now. So you have that backdrop, which is a little better. Reinsurance is a little better. So really they don't have the, just global macro headwinds that we did back in the 80s today. I mean, there's tough pockets here and there, but it's better off than it was 40 years ago. There are some in the title space. We've seen some carriers kind of pull out or shift focus, which which helps, as supply and demand, right? You get less carriers, then of course the demand is sort of the same or growing, so prices might go up a little bit. But I think in the last 40 years, much to their credit, the title industry space and related services have done a great job with their best practices and all these other things that, compared to 40 years ago, was a little different. I mean, if you think we survived the 2008, 2009, 2010 global economic meltdown, so I don't know how it gets much worse than that. So I think it's in a better position than it was 40 years ago, for sure. Yes, relatively.
Yeah. I'm wondering though, you mentioned just briefly, and I didn't mean to skim over it. You mentioned the importance of a title specific E&O provider for people in this space. And I think some of our attorneys in the audience may not appreciate the difference there. I hope our title agents do, but I wondered if you give me a little bit on that just for people that aren't quite sure why title specific is critical.
It's nuanced and it's front end and back end, right? So you got the front end of no one's ever going to have a claim, right? When you buy your policy, you say, I don't even know why I buy this stuff. It's silly. I'm never
need
going
it.
to, right?
Yep.
And it's not me, it's other people.
Right.
And you hate doing it. But on the front side, you spend a lot of time on our professional services definition, which is broad enough and fluid enough to kind of move along with the exposure. So if you look at it, names, I'm not going to get into all right now, but it's pretty boring. But it names a lot of specific sort of job functions within the title industry and associated abstractors, escrow, all these sort of things, notaries, and then also references the Consumer Bureau Act. I forget the name of the act, but there's an act that was part of Dodd-Frank that basically says, hey, here's the definition of professional services as well. So if that ever changes, then our policy flows right along with that verse. Like, oh God, I hope that's still covered, right? Mm-hmm. And then you got the back end. So that's claims, and God forbid somebody has a claim. You want someone who is sort of dedicated in that space, right? They don't handle auto claims. They don't, Bob claim over here. All our guys do all day long, and all they have done for 40 years is title claims, right? Title associated claims. So they have that network of outside counsel, should it come to that. They have the knowledge of whether to fight or not to fight, all this sort of stuff. So you can see it's a full process, and the importance of having something that was specifically tailored to a space.
Yeah, I would think so. All right, this is a question for me. We sorry, audience, but this one's for me. We use the phrase risk retention all the time. We talk about risk retention. You mentioned risk retention group. But again, for some of our folks that aren't business owners or haven't been on that side of this, in plain English, talk to me about a risk retention group.
You're in the vast majority, so
okay.
Congratulations. So things, entities, insurance companies, whatever, can have various structures, right? So you can be like a regular corporation. Think of any giant insurance company. You could be a mutual company. That's one that's owned by its insureds as well, but it can be in one or two states, all these sort of things. A risk retention group was something that was specifically designed sort of in the, I think, 1986 or something, magically around that same time that all that stuff was happening, to provide legislation. 1986, I got it right. So to provide legislation to allow folks to create kind of class-specific insurance companies. So, hey, we're all title agents, or we're all, open lot dealers, whatever we all are. We all get together. We all have an ownership in our company. It's called a risk retention group. Benefits of it are, one, you're all owners in there. Two, it's a federal legislation. So those of you not familiar with the insurance, mainly that's on a state basis. So if I want to go into Georgia, I got to file to Georgia. Then I go to South Carolina, then blah, 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 blah. Being a federal means you turn the keys, you're an RRG, and you instantaneously have reciprocity with, I think it's all the states. There might be a couple that don't do it, but you're able to write in all those states sort of immediately. So that's the biggest benefit. You don't have to file rates and forms. Well, you do, but you can use them. There's not the same oversight that there is if I'm writing, homeowners in Florida and I want to go to Georgia on an admitted basis. So it provides some flexibility there.
Well, I imagine it's to help keep expenses and therefore premiums down too. And did you say the policy owners own and govern the company? I mean, I would think that'd be a real benefit as a policyholder.
Yeah, in its purest form, they were owners in governance. That's changed a little bit over time.
Okay.
So to be a member, to satisfy the legislation, you have to be an owner of the RRG. So if you become a new member of TIAC, there's a stock issuance you get. It's non-voting stock. Back in the day, yes, they did. they would own it and vote and do all that sort of stuff. But the problem is you get thousands of insureds. That gets a little tough when you start voting and asking opinions on things and things like that. So you have a board and all this sort of stuff like a company would, but you do have ownership in the company technically as a share of stock. Voting is it's not very expensive, but it was originally designed so that folks could share not only in the good but also the bad, or bad not but also the good of the results as well. It's evolved a little bit over time, but yeah, we still have to have ownership in the company.
That is a different and exciting model, though, as opposed to just being a policyholder who sends premium in and hopes you
Yeah,
never need it. Like having that participation is a kind of a cool feature, I would think, for your
for sure.
insureds.
For sure, you take a little more ownership and you feel a little bit more part of the organization than you do in some big nameless, faceless insurance company where you don't know if they're going to remember you tomorrow or not. The theory is you get ownership in it and you care about the results, and so that helps you work a little harder as an insured.
Well, and you can tell me if I'm telling tales out of school or thinking about it incorrectly, but I think about what I'm individually a policy holder of, and none of those companies do I have any sort of ownership position in. And so I don't know what say that to say they seem to be much more in the claims denial business than the claims understanding business.
No
It's just
comment.
an entirely different mindset than most people are used to when purchasing insurance.
Yeah, and it is. And I think if you dealt with TIAC, you get a person on the phone, you get claims representation. We're looking for ways to pay legit claims and deny non-legit claims. As an insured, nothing worse than getting a claim paid that you don't feel like should have been paid, right? That's almost worse than getting one that you do think is going to get paid because you got your reputation, you got all that sort of stuff.
Yeah, sounds great. All right, I think most people in our audience know generally what E&O protects against, but what I'd like to ask you about is what are some common misunderstandings or some misgivings that you find that agents have about their E&O coverage and title?
Yeah, I think so. E&O is covering financial loss from your screw ups. There's a non-technical term for you, but that's really what's happening. So I think what happens a lot is that folks think, oh, I bought an insurance policy. I don't know what all the different kinds of insurance are, and this insurance is going to cover me for more than that, right? So it's going to cover me for cyber, which we can get into later. It's going to wire fraud. It's going to cover me for my first party property. Nope, it's going to cover me for someone slips and falls in my office. That's not what it covers. You say, hey, I bought a policy. Shouldn't I be covered? The best big. It just folks think it might be broader than it actually is. It was built to cover a certain subset of losses, which is, again, financial losses, and it does a good job at doing that. It doesn't do the other stuff.
All right, that makes sense. That makes total sense to me. I've heard a phrase claims made. What does claims made mean, and why should agents care about that?
Yeah, that was actually pretty important. And again, you're in the majority, not fully grasping
Okay,
what that
good.
means or what the opposite of claims made is. That's another one. So the opposite of it is an occurrence policy. We'll get to that in a second. So it is important to understand. So a lot of professional liability is written. In fact, most of it is. And interesting, or maybe not interesting, the further you get east, it moves to claims made for professional. If you go out west in California, most of that's on an occurrence basis. I don't know why, but ours is written on a claims made basis, and what that means is it covers claims that are made against you as an insured during the policy period, irrespective of when it happens. More on that later. So if I get a claim, it happens during my policy period. The claim is made during my policy term. Good, there you go, claims made. Occurrence is the other one, which means it covers occurrences happening during your policy period, which may or may not get reported for much later on. Title agent business has a tail of 6 to 7 years. That means delay in claims. So you could have something happen during your policy period and it not get a claim made against you for years to come. So ours is claims made, meaning it's got to be made during the year, but it's also got to have happened. You have to have what's called a retro period. So it needs to go backwards and cover. So say your agency started on January 1st, 2025. You better make sure that your retro date goes back to January 1st, 2025. Otherwise, if it occurred before your policy period, but the claim was made during your policy period, it's not going to be covered. So it's important. We always ask people, "What's your retro date?" And they're like, "I don't know." I'm like, "Well, you better find that out
That's something
because
they need to know. Yeah.
there could be a gap, yeah, a gap in coverage, which would be bad."
Oh, yeah. See, that's another nuance that we don't think about because we tend to think about the policy period being a fixed period of time and then just But
Yeah.
yeah,
Yeah,
that's a
exactly.
good
You got to worry about
that's
what you did. You got to worry about what you did a few years ago that might come back during your policy period.
that is true. And that's true in so many aspects of this business.
Yeah.
Um, okay, so we have, listen, next week I want to get down deeper into the nuances and particulars of the product, but
Okay.
generally, what should an agency owner or manager know before they select like their policy limits, their deductibles, that kind of thing? What do you like to have them think through or measure or be aware of?
Well, you gotta, yeah, you gotta take a look at your business and say, so there's more parts to a policy than this, but the big ones are right limit, both per occurrence limit. That means you get X amount of money per claim, and an aggregate limit, which means I can get X amount of recovery during the policy period. So say I have multiple losses, then that covers what's called, this is an insurance nerd, sideways. Sideways covers what that's called. Your deductible, which we all know what deductibles are. It's how much do I have to pay part of the loss? Can I afford that? And then what is required of me? So those are the main kind of components, and those are driven by what's required of me by lenders or other stakeholders I work with. So you go and you check and you say, oh, they need $1 million minimum. Well, you better have $1 million minimum limit. If you do a larger amount of transactions, you got to watch that aggregate cover, right? God forbid you have multiple claims in one year. You don't want to have $1 million limit and $1 million aggregate, and then you're all done for the rest of the policy period. You got to. We generally provide. We can provide, if you ever look on a deck page, it's 1/1. The slash, the first one is the occurrence, the second one is the aggregate. We provide 2 times the aggregate. Yeah, if you ever wonder why that slash was there, well, that's what that is. So you got to watch that. Most times our insureds are buying a sort of a 1 million/2 million. So they get 2 million of aggregate recovery. Thank God no one's ever actually used that amount of cover with us, but it does provide you that peace of mind if you have God forbid you have 2 big losses in one year.
I'll bet that's another gotcha that some people find out about their coverage too late is that they
Oh yeah, you
matched
buy
and
enough.
that was it.
Now you're all done. You better
One and done.
hold your breath till the end of your policy period and hope that.
Don't make any more mistakes.
Oh boy.
Yeah.
Yeah. Right.
All right. Well, just kind of in closing for today, I just had a couple of final thoughts. Like, is there a question you wish every agency owner would ask before renewal, or is there something you wish agents would know to stop assuming about their E&O? Like, if you could counsel them right before they put a pen to paper, what would you tell them?
I would ask them, if you let's just say you had an insurance policy for 20 years. You've been in business for 20 years. Is my policy or is my business still the same as it was 20 years ago? The policy I buy, maybe it is. I don't know. But so is my policy still covering what I think it covers now that my whether it's my activities I'm doing or the size of my business or how many transactions or whatever that's grown over 20 years, has my insurance caught up with it? Deductibles, let's just say I made 10 grand in my first year. Now I make $5 million a year. Is a $25,000 deductible still appropriate? Probably not, right? You could probably take a little bit more in the event of a claim, all these sorts. So take a look. Don't assume what you had 10 years ago is good now. Maybe it is. That's great. And don't assume that your policy form is still doing what you think it does. Ask the question, whatever that question is. Insurance companies aren't big on hypothetical claims coverage questions,
Right.
but we can point you to the right part of your direction of your policy form for sure.
That's great. Well, that's going to segue us into our conversation next week. This week, I really wanted to understand what TIAC is and why it's different.
Yeah.
Super compelling. Thank you for that. And then next week, I'd like to dive down a little deeper into some coverage decisions, some hidden risks, and some more questions to help people in their shopping, if that's okay.
Yeah, that'd be great. Hopefully everyone's still awake out.
They are. They're riveted, and they're going to meet us
Oh
back
yes.
next week.
Sure.
We in the title business know that for sure. Thanks,
Yes,
Casey.
exactly. All right, take care. Thank you.
Well, that was Casey Withers, Program Executive for TIAC. I really appreciated how clearly Casey explained some of the concepts that many of us hear all the time. Claims made coverage, retroactive dates, aggregate limits, risk retention groups, but we don't always fully stop to examine those things until we're already facing a problem. And one thing that really stood out to me is the reminder that your E&O coverage can't be static simply because your business isn't static. Agencies evolve, services evolve, risks evolve, and policies need to keep pace with that reality in a way that supports you, not leaves you with unknown risks. Join us next time as Casey and I talk about how agencies should evaluate E&O providers. what hidden coverage gaps can surprise insureds, and how cyber and wire fraud exposures are changing the conversation, as well as some of the newer offerings TIAC is rolling out that you will want to hear about. So thanks for joining us on Keys to Real Estate today. At October Research, this is exactly the kind of knowledge we mean when we say knowledge is the competitive advantage. So thanks for joining us. Don't forget to like and subscribe, and we'll see you next time. The presenting sponsor for this season of Keys to Real Estate is First American Trust. First American Trust redefines banking for title and escrow companies. They offer innovative solutions that integrate banking functions directly into title and escrow software systems, enhancing operational efficiency and safeguarding financial transactions. At First American Trust, you have direct access to a personal relationship manager who delivers answers in real time. First American Trust is also recognized as an elite provider for the American Land Title Association. As a wholly owned subsidiary of First American Financial Corporation, they have roots in real estate tracing back over 135 years and is the only bank owned by a title company. With deep roots, advanced solutions, and a commitment to real relationships, they are setting a new standard for the industry. The future of banking for title and escrow starts with First American Trust. Visit firstamtrust.com to learn more.